Welcome to RegNut, your source of news, views, and knowledge on all things risk and regulation. Isaac's got his glasses on, and I'm your host, Waleed. Hi, Isaac. How are you?
I'm very well. Yes, I've got my glasses on, so that means that we're doing something serious.
Today is payments. We've been trying to cover payments for a while now, so let's do that. Before we jump in, if you're new to these videos, we do everything in one take. So if you see us fumble, it's intentional.
On my fault.
How are things, Isaac? All good while I do this? Well,
All good. It's Monday. Sun is not shining.
But
It's
actually,
okay.
it's Friday, for all intents and purposes. We have filmed this on Friday. Oh, the magic is gone. All right, let's see. All right, so the world of payments. We are looking at world of payments. Let's start off. So I guess some housekeeping. We're gonna try to run this session quite tight. So we are looking at the big picture versus not the small picture. So because we're going to be looking at the helicopter view, there will be some details which we have to simplify just to get the message across. So please no hateful comments about we got this wrong or we got that wrong. We're just trying to crunch through a lot of detail in a very, very quick time. All right, with that, let's just have a look at how I think of payment architectures, and then Isaac's gonna sort of jump in and give his views. So I think of it in 4 layers. So you have the interface layer. This is your apps, your card, which is how you interact with the money, POS, so obviously when you're buying things, and your ATM machines. Anything else, Isaac, in your mind, or is just?
I think what's important about this slide is to then talk about where the PSI and EMIs fit in. But go on.
Oh yes, we will try to circle back up and down if
yeah,
if that.
Exactly.
You then have a processing layer, and this is the layer that then starts initiating the transfer of funds from the sender's bank account to the receiver's bank account. So you have the banking layer, which is where the funds are held. So the payment companies or EMIs or PSI, and more of this has become apparent, don't actually hold your funds. They only have the ability to sort of keep them virtually at a bank, so to speak. And then you've got a trigger that takes it through the pipes. So the pipes are your Visa, MasterCard, faster payments, BACS, CHAPS, that sort of things. I know, Isaac, you had a question around the role of PSR, the payments
service regulator.
Service regulator.
Yeah.
I believe that's what they regulate. They regulate the pipes. There are
Okay.
8 odd pipes.
Yeah.
And that's what they're doing. So it goes into the pipes, comes out the other end. The bank account for the recipient gets updated, and the payment process does it, and then they get a notification on their app.
I mean,
so Sorry, go on.
I was just going to say that if you've been brought up through risk management, like you and I have been through the more kind of the qualitative, the key thing about this slide is that this is about the interconnection of many technical circuits and stuff that we perhaps are not that used to. But so the range of risks and the number of third parties are really important here in a way that perhaps it's of a different scale than what we're used to see when we have been dealing with risk management and insurance, for example.
Good point. Way to bring insurance back into it. Excellent.
Yes,
I love it.
Exactly.
All right, just let's looking at the regs. You've got some European regulation. I'm going to ignore Brexit for now because we opened that can of worm, and then how much time do you have? You've got the PSD2 and the EMI directives from the European Commission that are driving the payment services regs and the EMRs in the UK. So this is from the EU. This is in the UK. If you're in France, you might have something equivalent to the PSR in France, in Germany, and so on and so forth. So those are the 2 primary drivers for the regulation for firms undertaking payments. You've got some other sort of, think of the second layer around is the anti-money laundering and some other governance and conduct requirements. These sort of get translated into the FCA handbooks, various different chapters, which talk about like fit and proper AML governance that apply to most regulated firms. And then you've got some requirements coming from schemes, and think of schemes as the pipes. If you're using a card, you are touching the MasterCard or Visa rails, and therefore those schemes would then require you to have certain things like, let's say PCI DSS compliance, because IT cyber security is the key thing when you are moving money around.
Yeah.
And then there are others which we won't get into simply because I didn't get a chance to research them. But yeah, we won't get into them.
Okay.
Anything else, Isaac?
So I think the key thing here about this slide is that there is also an important arrow going from the PSR and the EMR to the FCA handbook. So the electronic money regulations and the payment systems regulations, they refer to governance, they refer to risk management, and the FCA obviously expects people to read what does it mean in terms of governance, risk management, etc. from the FCA handbook. So from an authorization perspective, it might seem also quite a light touch, and it is, as far as we can understand. But the real challenge is the day one readiness. So yes, it can be very easy to get an authorization, or easier than getting an insurer authorized. But are you ready for day one? And do you have the governance? Do you have the risk management structures in place? That's a challenge.
Great. No, I agree. But just to summarize, that's the key thing that you care about. That's the main driver for the regs for the payments.
Yeah.
So now let's look at the licensing. So this is the most confusing licensing I've ever come across. So many acronyms that it's crazy. Before looking at the slide, the things that are in yellow are the things that you need registration for. So you don't need to be authorized to do them, but you need to be registered with the FCA. And the ones in orange are what you need to be registered for. So you need to formal approval. I've split them up into 3 bits. This bit is around sort of open banking and aggregating data. So your account information services is your ability to sort of map in multiple accounts into one app. So that, and they're pulling in data from open banking. And your payment initiation service is effectively another way to make bank-to-bank transfers by allowing someone to log into your bank account and then initiate a payment, like direct debit equivalent. I don't think direct debit strictly falls into this category, but I could be wrong. But it's effectively initiating payments. So they're using others' pipes to initiate these payments. They are not bringing things onto their processor and then processing them. If that makes sense, that makes sense. If it doesn't, let's have a chat offline. Then you've got the small payment institutions. So if you got less than 3 million, also just worth noting that there's no monthly transaction limits here, and there are no capital requirements, with the exception of a 50K capital requirement if you are actually going into people's accounts and moving money around on their behalf. In the small payment institution, this is where you're undertaking payments activities. So things like remitting money, if you're running a POS, so people are using a card at the merchant and you're taking money and putting it into the merchant's account, those are effectively payment services. So if your monthly transactions are less than 3 million, then you need capital anywhere between 20 to 50K. So 20K is for remittance and 50K is for other services. If you're more than 3 million, then you've got a capital requirement of 125, and you are then looking at an API license. The difference between a payment institution and an e-money institution is that for an e-money institution, you're holding on to the funds before they're passed on. So a good example is any e-wallets or Revolut. It holds on to your money, so you load it up, it waits for it until you're ready to spend. And that's the key distinction between a payment institution that's just throughput versus an EMI that holds it for a bit before releasing it. And again, the holding is not happening with the EMI, it's holding is with the bank, but the EMI is doing it on your behalf. There, obviously, because the nature of the activity, regulated activity, is a bit more risky because you're holding money, the capital requirement goes up to 350. And then you have a small EMI if your monthly transactions are less than 5 million, and a full EMI license if it's more than 5 million. One sort of word to notice is that for the capital requirement for the small EMI, the regulation allows the member state, so the UK, or the European regulation would allow the UK regulators to be flexible with this money, the 350. So you could see that if you're a small EMI, you could have a lower capital requirement depending on how far away you are from that monthly transaction limit, which allows a smaller firm to get into this play and then grow over time. What that number is, that just depends on a one-to-one conversation. Isaac, anything to add, refute, rebuke?
Uh, no, I think just as a segue into the next slide, I think it's just perhaps being clear that the difference between an EMI and a bank, a traditional bank, is that it's not that they're not holding money, because both of them are holding depositors' money or people's money, if you want to avoid the technical word. The difference is that the bank lends money and the EMI holds the money only. The EMI will have a deposit with an authorized bank, and it's just a question of matching how much money you've taken from people and how much money sits in the bank. So it's that lending that is the absence of that lending, if you want, that is a difference with a bank. And then we go to see that in practice.
Yeah, so just on that, I think it's even the money that the EMI is holding, it's not holding in an account of their own. It's in an account in a bank. That account is ring fenced for that EMI. Let's see if we can explain that through this castle analogy. So we briefly looked at it in a previous video. I will add a link below on the YouTube for that video. But effectively, the way we describe it, I think of a castle as anything that's balance sheet regulated. So you have your bank and insurers whose balance sheet is regulated. In terms of a payment institution or an EMI, they are effectively the gatekeepers for these castles. So they collect money. Let's say for an EMI, they collect money, but it goes straight to a bank and it lives in a bank. So the safeguarding of that money is a responsibility of the bank. The responsibility of the EMI license or EMI, so electronic money institution, is to make sure that they keep it in a well-fortified bank. But ultimately, as an EMI or as a payment institution, what you're doing is you're doing the gatekeeping of the payments. So if it's a EMI license and you're holding the money, it goes straight into a bank. If you're a payment institution where you're not holding the money, think of it as a gateway that goes around the bank and onto somewhere else. But you're effectively channeling the funds. So therefore, the key risks are the movement of in and out of the gates, which we will look in a bit. And then you've got obviously your own little balance sheet that you need to make sure that you have enough funds to run this gate correctly. So people are coming in and out, they get checked. So the bad actors aren't entering the town or the village or the castle. And that's financial crime, by the way, and so on. This will make more sense on the next slide, but it's just worth distinguishing between banking that can hold the money and therefore lend it as well, versus a payments company which can virtually hold the money, but the money itself is held in a castle in a bank. Isaac and I had a long discussion, and Isaac did not agree with some of this analogy. So Isaac, I'm happy for you to come in and chop at it where you don't agree with it.
I mean, I think the only other beauty of the analogy of the castle is that it gives you a way to think about the risks that are coming down the river, the emerging risks, and it gives you a way of thinking about threats and vulnerabilities that obviously with the gateway it's a little bit gloss over, but yeah, that's fine. Let's talk on the next slide. We can talk about
let's
the
go.
Yeah.
So again, if you're sat at that post, what we worried about is the biggest worry is always financial crime. So people coming in and out of the gates, there are no bad actors in there. So that's what you want to check. This is why when you look at payment institutions, one of the biggest area of focus is financial crime. So AML, sanction checking, ABC, so anti-bribery and corruption, tax avoidance, fraud, all that good stuff. The other key one obviously is cyber. And again, this is you're trying to make sure that there's no ninja that can scale the wall and go around or swim across the river. So you want to make sure that your security is tight enough. I'm really going to town with this analogy. Huh?
Yes,
Your security is tight enough that you're not having unintended money flow without your knowledge effectively. There's bits around operational resilience, and this is, think of it as uh, letting people in and out smoothly, so there's no friction. If there is someone who needs extra checks, you direct them to a different line. So right now I'm thinking Disneyland, but I won't go there. But effectively, you
Okay,
want to make
please.
sure that the queues are running.
Okay.
And the same thing goes with the customer service. So the operational resilience is someone's at the gate saying, "Hey, I want my money." You want to make sure that you can go and fetch it from the bank quickly. The number you tell them that this is how much you have is in line with their expectation. That's what the op resilience is. And the customer service is where my badge isn't working, my app's not working. How do I make this transaction? So Q&A bits and bobs. And then lastly is the business model. So do you have enough money in your accounts to pay the guards, to pay the people for the ongoing running of the gate?
Mm. That's
Too
all
much
right.
too much analogy? Too much? Anyway.
Too
Anything
many
missing?
analysts.
Anything
No,
missing?
no, I don't think there is anything missing. I mean, I think a couple of thoughts. I mean, I think the first one is whether the new requirements we've seen on operational resilience from the FCA apply here. To be honest, I'm not entirely sure, but I think if it doesn't apply today, it could be like the SMCR regime, where gradually the number of companies involved expands, and eventually everyone is covered. Because at the end of the day, when we think back about that first slide with a number of layers, it's clear that the operational resilience is quite important. I mean, I think the record is that it's worked so far so good. But if you're thinking about this as a regulator, then operational resilience should be there at the top of the list. The
Yeah.
business model is the one I found interesting, because the business model, well, I mean, at the end of the day, anyone in payments, I guess, is making money out of a fraction of the charges that are made through the chain. So you're a little bit like a little bit like a bank, in the sense that you depend on the volume of activity. And obviously that creates risks because that volume of activity is a little bit outside your control. You don't control GDP, much as some people would like, but you don't. So then the question is how you can diversify your income stream. And you see that when you look at some players, they're thinking about offering free services, but up to a threshold. If you exceed that, then you have to start paying some fees, which help the EMI or payment services diversify its income stream. And you see them also making all sorts of offers of additional services that will then generate or enhance that revenue stream through other means that are not necessarily the standard payments fees that might that will arise anyway. So I think that's a key thing about the business model. The other aspect of the business model is what we see with the likes of Revolut, and I think we've seen with others, that they see the EMI as a kind of a way in to become a bank.
Yeah.
So I guess that when you're thinking about the business model, then the key question is, okay, are you taking this route of EMI or PM or PSI as a kind of as a journey to something else, or
Mhm.
are you strategically contented to do this? And depending what's the answer to that question, then the risks with the business model would be very different.
Yeah. So on the op resilience, I think that's always the top. So any service that gives people access to their money, it has to have a very high level of resilience. If you cannot access your money in Revolut today, you'll be on the phone with the FCA in within 5-10 minutes. As for the business model, I think again, because you picked Revolut, there's no reason to pick Revolut or not. You then want to make your gate as attractive as possible to let other people come to it. So my view, if we just go back, how do we go back? That in the payment space, this is very commoditized. It's just a race to the bottom. You have to have scale. You have, and you're just earning some cents on the dollar for each transaction. On the EMI, I think there's additional value add activities like again taking Revolut. You've got FX, investment, crypto. You get multiple services that you can offer, which allows you to then charge a subscription. Plus, you've got the cost per transaction. Oh my gosh, very bad at this. Never mind. So yeah, so no, I agree with that. And then your point about maybe it gets to a point where you start building a castle of your own around here. See, I told you I'd get you to a castle because you're mature enough, and suddenly you've got a castle which allows you to keep your money right here, and then you can let other people come into your mini castle. But again, the cost of building that castle is a factor in that decision. I think that's all the slides we had today.
Yep.
That was a quick whistle-top tour of payments.
Indeed.
Not sure how we did on time, but we'll find out after the fact.
Yep. Very good. Let's leave it at that.
Take care, guys.
Bye.
Bye.